Okay, everybody, I apologize. We are ready to go. I would like to turn over today's presentation to Andrew Bonet. Andrew is the Director of EB Tax, eBiz Answers, and the co-chair for the Tax Management SIG. Andrew, take it away.
Thank you, Anna. Good morning to everyone over on the US side and the other side of the pond. Good evening. I'm going to do a presentation today. It's primarily to give you a little bit of an insight to the Fusion Tax module, some of the new changes. Bolted onto the end of that is a European best practice setup. I'm not going to spend too much time. I'm going to go through fairly quickly. Just quite a bit to cover. So if anybody has any questions, please do ask them at the end. As you can probably tell by the PowerPoint presentation, this was a presentation I did at Oracle Collaborate, but my people that attended then requested that I redo it because it has some good value. So, Fusion Tax for European VAT best practice. What I'm going to do is go through, tell you a bit about myself, and then I'm going to go into explaining about the new tax functionality within Fusion, and then also talk a little bit about taking on designing and implementing a tax project. So, as Anna kindly said, I'm the chair of the Tax Management SIG, or rather joint chair. I've been doing Oracle now probably 16, 17 years. A lot of that now on R12, and primarily now I focus on e-business tax. So I set up a consultancy, which is eBiz Answers, and we specialize in bringing tax solutions. So where I'm sure many of you have been on projects where somebody just has a go at building the tax, they get somewhere, but it's never quite right or doesn't quite do what they hoped. We bring a solution, and straight away you'll have that tax solution. We've also developed a product called the EB Tax Rapid Install that allows us to do a rapid rollout. So, for example, we could do 30 countries in about 4 hours. So there's a lot of new functionality with Fusion that can actually help with the rapid install or the rapid approach as well, which we'll be covering. So I'm going to cover some of the new features to the Oracle Fusion Tax, some of the pain points you're going to find with a tax solution, what you should be aiming for, Fusion Tax best practice, and in reality it's whether it's EB Tax in R12 or Fusion Tax, it's the same best practice in reality, and then potentially some workarounds needed. So let's go and have a look at some new functionality. So Fusion Tax is primarily the same as it was in R12. The architecture is the same, the way it works is the same. Pretty much the way you set it up and everything else is the same. However, there is changes to the way the navigation works. It's been made more intuitive. There's a big drive by Oracle to simplify. They want to be able to compete more with the smaller ERP companies that don't offer as much, but claim to be able to simplify solutions. And that's, I think, something that I know Oracle have done with the tax module. They really are pushing to make it more simplistic, make it easier for users so it can be rolled out very quickly, but also retain the enhanced functionality that if you know what you're doing, you can pretty much get the tax engine to do anything you want. We have the ability now to extract and upload. So if you want to, or if you have an environment where you have your tax regimes and rates and conditions, everybody who's done tax setup, I know it's slightly different in the US because you often use a third party, but I think that will change. I think the tax functionality is going to change the game. I think the third party guys are going to see things changing because it's going to be easier to set up the functionality within Oracle, client-specific, or whether you have global standardized solution, and then using the tools where you can download and upload. And you don't have to download from one client only. You can actually take a solution and then put that anywhere else, and you can then upload that using Spreadsheet. So that's a really good a good move by Oracle to help there, because that was probably one of the biggest downsides to the tax module, is the amount of time it physically takes to configure it. And I mean, that's the reason why we developed the EB Tax Rapid Install tool. The Tax Simulator massively changed. The Tax Simulator is actually a tool that I'm excited to use, rather than a tool in R12 that I never used. To me, the Tax Simulator was a waste of time. It was easier to put the transactions in AP and AR and test it there than it was to try and work out how to get the information into the Tax Simulator, because none of the information was dependent on anything else. So you never knew whether the information you put in was correct or not, and then with the tax being calculated. So it was quite a bad tool in R12, whereas in Fusion it's a fantastic tool. There's some more enhanced reporting, so whether it's localized country specific. One of the things for Europe was there was a process that allowed the EMEA VAT selection process that would put all the data from your AP, AR, etc., and put it into a single table, and then from that table the majority of the localized country reports around tax would be run. Indeed, that's where I base most of my reporting or bespoke reporting from. Now, the reason why they had that table was because there was, to pull the data directly from Oracle, there would have been a lot of call functions going on. It would have been a slow process. But what Oracle have done now, they've actually enhanced the amount of information that is captured at the time the tax is saved. So your ZX tables, your ZX details contains a lot more information than it does in R12, and therefore the reporting can be sped up and you can get more from the actual direct tables, which is great. The solution's also stabilized. Previously, and I think with most people realize with Fusion it's still on its journey to becoming the product that it's been promised to be. But the things that I'm seeing, or the changes that are now happening within the Fusion Tax, the way that Harsh is trying to drive things forward in the innovative ideas that he's having, to me shows that they've stabilized the solution and are now looking at enhancing the solution. So we'll cover some of those changes in this presentation. So let's have a look at a tax. In R12, you would normally find the tax either by searching the tax or go to the regime to rate flow. With Fusion Tax, they've really tried to make it more sort of intelligent, or more where you had the regime to rate flow that kept everything together. With the Fusion Tax, they try to extend that. So when you go into a rate or a status, you instantaneously have all the information that links back to the actual rate. So you almost have the regime to rate flow at any point. And as you can see here, we've got the tax information here. So as I said, the regime to rate hierarchy is built in, and it gives you the sort of values, the jurisdictions, as for example the regime, the status, and everything else. I apologize for the size of this. I designed the presentation to present to an audience, therefore rather than having a small screen, I've enhanced it a little bit there. The other thing is the rapid install. I think this is one of the big things that everybody got excited about, is the ability to take a spreadsheet, whether that's from a previous client, whether you design it yourself, or whether you will potentially be able to buy a spreadsheet, and you can load in a tax solution. So as you can see here, this is your spreadsheet. It's probably too small for you to read, but you can see at the bottom there you have the tabs. So one is the managed rates, one is managed recovery rates, managed tax rules, etc. And if we actually were to go to that particular spreadsheet, you do have seeded values already built in. So the actual tax regime, for example, is fairly standardized. So AT VAT there, which is Austrian VAT, that would have the currency, the different values, and you can therefore choose that tax regime. You can actually see here this is for managed tax rates. So you choose your regime, you choose your tax, choose your status, etc., and you put in the tax rate name and all the information. So it's not, still you need to have understanding. I'm constantly going to client sites where they've had an integrator who is trying to set the tax up, and they have no idea about European law, for example, or Latin American tax. And so, to build the solution up, you still need to have some sort of understanding. You need to understand, the number of rates, regimes, and everything else that you will need. So it's still not just a straightforward thing. I still advise that you get the right skill set to do the work for you. So this is, it's a fantastic tool. It's from, you download into Excel, you upload from Excel, so it's great. Now the tax simulator. In R12, the tax simulator was awful. Very difficult to use. It was almost impossible to bring the values in that you wanted because they weren't dependent on each other. You could choose any supplier site, link to any supplier, and of course the values would be different depending which values you chose. You often couldn't even search for the supplier that you wanted because of the way the search functionality worked. You had to keep re-entering all the values over and over again. If you wanted to make a test, you could save it, but then it just became very difficult. So for me, it was always easier to go to a test environment and use the AP or the AR modules instead, because at least I was using real information. But now, what you can see here from the top, we can now search for a transaction that's in production. So if you've got a situation where someone has said the tax isn't working or is not behaving correctly, you don't have to try and recreate it. You can go straight to the production environment, you can search for that transaction, and then you can bring it back. And here you can see it's telling you the actual transaction here, document number 0104, etc. It's telling you who owns it, legal entity. So you can say, yeah, that's the one I want. And then by clicking on it, it copies that transaction into your tax simulator. Now to me, not only does that make the tax simulator something useful, but it completely revolutionizes the situation about handling tax problems, because you can have someone in your tax department who doesn't have to have any access to a transaction. They can actually then check the transactions themselves, and without modifying in any way to the full security, they can actually check that transaction and they can modify it themselves. So you're giving more power to the tax department, to the people that know what they're doing, to have a look and to understand what's going on. And not only that, they're also checking, they're using the same screens over and over again, so they are familiar with the data that they see. So they don't even need to be familiar with an AR or an AP invoice screen or transaction screen. So if we look here, this particular value is showing you the tax rate that's been calculated, the percentage, the amount, whether it's inclusive, self-assessed, whether it's a tax-only line. And if we go on to the next section, you can see here that you've got the tax regime, the tax, the jurisdiction code, the tax status. So absolutely everything that has been calculated or is linked to the tax rate that has been pulled back. So whether it's a global rule or party-specific, for the US, for example, you'll be able to bring all the, the actual, whether it's a state, county, city, the actual jurisdiction that was used to drive that tax. So if the wrong tax is calculated, you can then check the jurisdiction. You can find out that maybe the jurisdiction is wrong. You can then either update that yourself or go back to your third-party supplier and say, look, we've got an issue with this jurisdiction. Why has it calculated? And then, you're really getting to the issue immediately. It's a fantastic tool now. We also get to see the whole rates to regime, the rules and the conditions that have been used. So here you can see, and those that are familiar with the tax, you've got the direct rate determination, place of supply where it's applicable, tax registration, tax status, and of course you'll have the rate, the recovery rate as well. But you can see, based on that rule type, i.e. direct rate tax rate determination, you get the result. So if we look at if we look at the details here and how the result was obtained, we've got rule-based. So that's telling you straight away that rules were used to drive that tax. So you know that it's a rule that's done that. You know, the line 2 there, it says default. So obviously no rules were used, or all the rules were looked at, and none of them were active or activated rather, and therefore it took the default. So if you had a place of supply rule, for example, that you thought had kicked in, this straight away would tell you no, there was no rule that kicked in this place, it just took the default. So straight away you can go and check those rules and then look at why they weren't activated. What we also have here is that if we click on this direct rate determination, which is this particular rule-based rule type, we can see that the direct rate termination, or the rule conditions, what those conditions were that were chosen. So you can see that we've got the rule order, we've got the rule code that was used, we've got the tax determination factor set name, we've got the result, and then we can also see the rule condition that was used. So all from one place, you can see everything without having to change screens, go to your conditions, go to your rules. Everything is there at the click of a button. Everything is taking you directly there. You don't have to even do lookups or searches. You click on, in this case, the rule type, and it tells you this is the condition that was actually used to determine. So here you can see the tax rate determination rule condition, transaction input factor. There was no class qualifier involved. So it's basically, this rule is basically saying if the tax specification code is equal to ZX rate TCC 15%, then that's the rule that we want to use. So what else do we have on here? We've got the information about the regime. So you've got the configuration owner, so whether it's linked to a party, or in this case it's the operating unit, or business unit rather, in Fusion. We have the event class, so we know it's a purchase invoice that is taking place here. We have the name of the supplier, or in a customer, for example. We have the third party, the site name. So we have all the information. So if we were expecting a particular site, this simulator is telling us all the information that we need. So as I say, from a support perspective, this makes the life of a support analyst so much easier. And also from a logging in an SR, you get to the information straight away. So here's just an expanded view showing you that the regime determination set, tax regime, etc. You can drill down further. So here we've got the tax rules, processes, and results on the rule code. So in this particular, from the actual simulator, we got to see which rule was chosen or which condition was chosen. But we can drill down further and see all of the conditions that are linked to that particular rule. So here you can see, for example, the evaluation order, which was number 1, process result was successful. So you can see there that some of the rules were not even evaluated. So if you're expecting rule 1 not to have kicked in, and it shows here that it is successful, then straight away you can say, hang on a minute, why has that happened? And then you can go and have a look and say, evaluation order, maybe number 3 should be 1 and 1 should be 3 instead. So you can have your rule order, 10, 11, 12, but the way Oracle evaluates it is also shown as 1, 2, 3. So it's very clear cut. And this is particularly useful if you have, for example, multiple recovery rates for a bank, for example, where you may have 200, 300 tax conditions in one determining factor rule. And your rule order numbering gets a little bit sort of chaotic because you don't know what the last number is as you're adding. So it could be 10, 20, 30, and then it goes to 200, 201, etc. So having that evaluation order really does help. Definitely a really good really good thing that Oracle have done here. So what else do we have? No more tax on GL journals. Now, I have to say a lot of this stuff is coming in with the release 9 of Fusion, or rather it is with release 9. So no more tax on journals. Previously in R12, you had the ability to enter tax on a journal entry. But because a journal entry didn't have any information to do with where you're buying it from, the supplier, exemptions or anything else, the tax in GL was pretty manual. And it also meant that the user had to choose the physical tax rate, and it also meant that they had to do it in the right way. If they put a tax line in, but they didn't associate it to the tax, they didn't click the right buttons, it could be that that journal was saved and that tax information was lost. And generally, you shouldn't have tax on journal entries anyway. Anything that is taxable should really go through your AP or your AR. But some clients may have a requirement, whether it's an interface or they insist that they want to put petty cash through the GL. So how do we get tax on journals now? Well, what we have instead is a version like the Application Desktop Integrator. And what you have is the ability to load journals in and put the tax information on then. So from what I believe, you can actually choose who the supplier is, for example, or who the ship to, who your entity is. You can choose if there's any exemptions or anything else. So you can apply information that will actually lead to the correct tax, or at least you can put information on there that the tax engine can now use in the reporting. So you still get to have tax on journals, but you don't put them on the journal itself. You have to load them in via a loader with the journal information. You're now going to have the ability to use the tax engine from other modules. This is something that is, in my opinion, is critical for some companies. You should always have one system to do as much of the work as possible. Too often I go to clients, particularly financial institutions, where they'll have 5 different billing systems, all calculating tax, all printing their own invoices. Why not interface that information into Oracle, let Oracle print those invoices, for example? And why not let Oracle calculate the tax? But you can't create the invoice, work out what the tax is, then pass that information back to a billing system, because that could take too long. Or if you have a shopping solution, like Amazon, for example, where you put your goods in the basket and you hit how much it's going to cost me, you can't wait 2 minutes for it to go back and into Oracle work out the tax and an AR transaction, for example, pass that information back. You'll lose that sale. So using an API means you can pass the information from a Salesforce.com, for example, into Oracle, particularly if you're using a Fusion cloud-based solution, pulls that information out of Oracle, i.e. the tax, and it passes that tax code, an accurate tax code, into your third-party tool. The beauty of it is that that same information will eventually be passed through into the order management tool or into receivables. So the tax that your third party, such as Salesforce.com or your billing solution is calculating, is almost certainly going to be the same tax that you're going to calculate when it gets interfaced in. It also means you only have one place to update the taxes. So it's going to save you money, it's going to save you time, and you're going to have consistency through your whole company. Party exemptions are now can be imported. This is something that we're always asked about for the US. How do we import our party exemptions? It's a pain in the backside having to manually monitor this. How can we do this? So with Fusion Tax, this is now possible. This can also be done to party tax registration details. So particularly in Europe, where you've got VAT details, if you've got any third-party tool which has tax information, we can bring that in. And what's also an option is that you can embed checks. So you can actually enter a client's tax information and do a search. So whatever tool you have, whether it's like a Bloomberg, Dun & Bradstreet, for example, Dun & Bradstreet, for example, you can now link that to their tool. So you can actually maybe enter the customer information and then do a lookup direct to get the tax information. So again, this is another way forward. It's to simplify the way that suppliers and customers are set up. Withholding tax is being moved from AP to the tax module. The number of times I get asked about withholding tax and I have to actually say, well, actually, it's not really tax. It's the withholding of the tax for the government. So to avoid that confusion, and also because in R12 and in 11, the way withholding tax was done was very, very rudimental, very basic. It didn't really have much. You couldn't really be creative with it. And because of the requirements with things in or Latin America, for example, moving withholding tax into the AP, into the tax module means you can do a lot more with it. You can actually have rules that can be maintained from one place. So it's another good move. Threshold limits, max tax in Florida, for example, Latin tax engine, where you've got the threshold limits there. That is now available in Fusion Tax. So something that wasn't available before, that's now been incorporated. And as I mentioned, there's no more Latin tax engine because that, with withholding tax and with thresholds all going into Oracle, there's now no need to have a Latin tax engine. It can be done within Oracle. The other bugbear I always have with Oracle is the self-assessed tax. In Europe, I always put in offset tax because it's visible and users are used to seeing an offset tax. And for those that don't know what an offset tax, it's pretty much your self-assessed tax, but it creates a line. So you'd have a tax of 20% and then you'd have the offset of minus 20%. I stay clear of self-assessed tax unless it's in the US. And one of the main reasons for that is because when that self-assessed tax is calculated, I have no idea that it has been unless I go to those tax details. Now, the self-assessed tax information is visible. So if the tax engine is calculating that use tax, and use tax has been generated and it's been self-assessed, we can now see that on the transaction line, which is fantastic. So where you get users who may think a transaction has been exempted, but self-assessed tax has been calculated in the back end, they will now see that tax has been calculated, and then they can, if they know it should be an exempt, for example, they can then address the situation immediately. Finally, we get a location of discharge. Unusual name, but what it basically means is your final ship-to location. So an example would be, I have a client who sells coal. They're based in France, for example, and a client in Germany says, we want to buy this coal. We're going to send a ship. Please load that ship up. We want, 100 tons. So the problem is that the ship-to location on your invoice is going to be the port, because that is the ship-to location where those goods are going to. Now, if we were in France, for example, and we calculate tax first on the ship-to, if the ship-to is France, then we're going to calculate the local 20% tax. So if you have an order that is for $1 million, you're now going to get lumped with a 200,000 tax bill as well. And your end client may not want that. Maybe they're shipping the coal offshore to Russia, for example, so therefore no tax is due. Or they want to reverse charge it in Germany, and again, that would come directly off their VAT return. They wouldn't have to pay anything. So now we can put a final ship-to in. And what that means is that we can say that the final ship-to is Russia, or the final ship-to is Germany. And therefore, the tax engine can be configured to look at the final ship-to rather than the actual ship-to location, and therefore, as the name says, location of discharge, i.e. the location where the product is actually going. It means we have more flexibility on how we want to deal with that. So if you have a customer that you trust, you can use the location of discharge to calculate the tax, i.e. a 0%. If you have a customer and you don't trust, and you don't know whether they're sending this final shipment, then with a party classification, you can then drive the tax from the actual ship-to, which in this case is France. So it's there's lots of new functionality coming in. Most of these new bits of functionality are all enhancement requests that I've logged over the last 8 years at some point. Unfortunately, a lot of these will not be backported to R12. So if you are considering going to Fusion, and the Fusion modules that you want to use are mature enough that you're not going to have lots of issues, then you want to start looking at Fusion, because the benefits that are coming in are certainly around the tax, which is the area I specialize in, are looking fantastic. We really will have a third-party solution within Oracle, if that makes sense. You won't need to go to a third party for your tax because Oracle will do it all. There's absolutely no reason to sort of outsource because Oracle have designed the solution to allow you to do it yourself. So it's going to be a big game changer. Next 2 to 3 years, we're going to see a lot of things changing, I think. So sell your shares in some of those companies. Right, so I'm going to move on to the second part of the presentation. So indirect tax on a sort of European best practice. The same thing goes really for to the US as well. I know the US, you primarily use third-party solutions. You know, Canada, South America, whether it's Pacific, Asia Pacific rather. There's several key things that you need to understand. As this statement says here, in Europe the VAT gap is estimated to be 100 billion. I mean, that statement was taken, I think, from 2009, so the gap is probably even bigger. Because of that gap, whether it's fraudulent or by user error, accident, for example, governments are starting to change the way that they look at the tax. They're doing more audits. They're asking for things to be more electronically derived so that we have more electronic reports, etc. And they're not waiting till the end of the year. They want things, monthly, weekly, daily almost. They want to know what's going on so they can keep a check on you. So what's really important is that you have a solution that is actually a solution. That's a really, really important thing, is that you actually have a solution. Time and time again, I go to client sites where they've just got someone having a go at setting up tax. So you need to make sure that whatever you put in, not only does it meet your current requirements, but you want to ensure that you make sure that you are compliant. So what I do, I liken a tax solution like building a house, right? So if I just gave you the materials, i.e. there's Oracle Fusion, there's your manual, have a go, you'll end up building something that's substandard. There's no one that can design an optimal tax solution without having done it and made mistakes a few times. It's not possible. But if I add the plan, so if I give you some direction, if I give you the template with those countries, the regime to rates, if I give you an idea of what you need to do, like a BR100 document, then you can actually start putting something together that's a little bit more useful, something that resembles what you actually want. Again, it's not necessarily going to be the optimal solution. But if you have a project manager, the architect, you have the plans, and you have the right building materials, you can achieve exactly what you need. And that is something that's critical. It's one thing to be able to create a tax code and a tax condition. It's something completely different to create a tax solution. And time again, I come across companies where they have completely messed up because they have no idea about the overall solution. They're just building it from scratch. But not every house has to be the same, right? At the end of the day, there's plenty of ways to skin a cat. So that's something else to be aware of. There are best practices in place, but you don't necessarily have to follow just one way of putting in tax. And I've seen plenty of different ways. I believe I've come up with the optimal solution in what I do, but there's other ways that people prefer to do because it gives them more control, maybe, or they're doing something that's a little bit unique with their business and they've decided to go down a different path. So there are best practices to follow, but there's not necessarily just one best way of setting the solution up. So let's have a look at some of the common problems that you'll find when putting in a tax solution, okay? So the first thing is the lack of understanding and underestimating the size of the tax module. The tax module is huge. It may not seem a lot, but the amount of areas that it touches, whether it's purchasing, payables, projects, order management, expenses, receivables, all these modules have tax calculated in some way. A lack of understanding of indirect tax. The number of times I see a project that's been offshored for cost reasons, and the users that they may have doing the configuration have no idea about the countries that they are rolling out to. So they either don't understand what is required, therefore they may not have the right knowledge to set it up, and then in the worst case situations they start customizing the solution to try and make the tax fit. So that's something that I see a lot. You don't have to customize the tax ever. I've never had to. There's small customizations to help with the information of the tax, but you never have to have customizations that work out what the tax code should be and then insert that tax code. That does not need to happen. We often see poorly designed solutions, and quite often that's linked to the 11I mentality. Most of us in the game these days started out in 10.7 or 11I, so we're used to dealing with what we know. And of course 11I solutions are very different to R12 and very different to Fusion. And because Fusion is so new, most of the people that will be coming into it would have had 11I or R12 experience. So, the majority of the systems I see keep an 11I solution. I would say 90 to 95% of the solutions I see have the most basic solution possible, not utilizing the rules properly at all. No consistency in setup. We see, one country being set up and then the next country is done completely differently. The naming convention is used. It's like, oh, tax rule 1, tax rule 2, and then it's tax rule 2B. Because people don't know what they're doing, they're building it on the fly. And because users don't see the rules or anything else, it's only when the project goes live and somebody else has to step in to maintain it, they have no idea what that person has done. And of course, we see lots of shocking solutions that have been created, normally because the integration partner has tried to get the solution in as quickly as possible. And therefore they've taken the quickest route and often not use any of the tax functionality. So, big thing to remember always, tax is tax. It doesn't matter what industry you're in, it doesn't matter how many people you have, what departments, what type of products you sell. If you are registered for tax in a certain country, you have to abide by the same rules as everyone else. Of course, you may have additional rules because you may have the same VAT group, you may have special exemptions, but those special exemptions would apply to other companies as well. So therefore, whenever you're approaching a solution, always remember that tax is tax. There is only one way or one end result. If there is more than one end result, then I can assure you either the loophole will be shut down or whichever route you're taking, it gives you an optimal tax treatment, and therefore that becomes the only end result anyway. So what you should be aiming for, fully automated tax solution. Absolutely no reason why you can't fully automate the tax solution. In AR, for example, or any of the order management side of things, you know who you're selling to, you know the product you're selling, you know where you're shipping from, you know everything about the sale. Therefore, you can fully automate the tax. In AP, slightly different. You pretty much know most of the information, but in many cases, until that invoice turns up on your doorstep, you don't fully know. Maybe the supplier is not registered. Maybe the supplier has charged the incorrect state tax, for example. So sometimes there are differences, there are rounding differences. So an AP user has to be a little bit more vigilant, and therefore whilst you can automate as much as possible, there is still some manual intervention in AP. Design your solution based on what you want to report. Any ERP solution should be designed on the information you want to get out. It's the same with tax. So design the solution based on those reporting requirements. If that means you need a few more tax rates because you need to split between the sale of an asset and the sale of a service, for example, then do it. If you're automating the tax solution, the user should never be choosing the tax anyway. So it doesn't matter how many tax rates you have because the system is automatically choosing them. Have a solution and make it global. So whatever you set up for France, the same structure can be used for Germany, that same structure can be used for Japan. Of course, Japan and France are completely different in terms of the European laws, but the same structure, the same, if you're selling outside of the country, where Japan may only have one rule and France has 5, you can still structure the hierarchy, the same rule orders and everything else. So when it comes to maintenance, when it comes to updating, you always see the same solution. It's really, really good. And that helps to future-proof the solution. One big thing that I always push for is to reduce user error, you reduce user involvement. So don't let the user ever choose the tax rate. They only ever choose information that leads to that tax rate. So in Fusion, for example, you'll be able to set up fiscal classification codes, party classification codes, intended use. All these fields where information can be added or stored means that when the invoice comes in or when you send an invoice out, Oracle already has all the information it needs to calculate the tax. If you are getting a user to choose the tax, then you're getting one of the least experienced people in your business to decide one of the most complex processes. And there's also lots of tools out there that you can go to that you can put some information in and it tells you what tax rate to use. The problem with that is that you don't know if the user is using it and you don't know if they put the right information in. So even if they have used that tool and the tax has been calculated or they've chosen a tax, then you can never be really sure. And one of the things that we do as a company is that we build in audit control within the reporting. So if a user tries to enter an exempt tax rate and it's from a foreign purchase, then our system will override that and put the correct reverse charge in. Likewise, when we run the reports, we can run reports that show all the transactions that have had any manual intervention around the tax. So they become your most wanted list. The tax group or your tax department stop doing a monthly tax return and having to do all these manual changes to start doing a weekly or even more frequent processes where they can actually identify the problematic transactions and get the relevant departments to correct them before they become a problem. By doing that, it means that they're pushing back to the people who are entering the incorrect information. So they get to make the change and they get to get training in effect because they realize they made the problem. They also have to make the change, so it's extra work for them. They're going to soon want to change their ways and get the right tax calculated rather than just trying to force through a value just to get a payment through. So it starts giving you a productive system rather than a reactive system in effect. I'd also say, turn off tax on purchase orders for a lot of European suppliers because you recover the tax and things like that. So what you want is to install confidence in the system. When the users who are using it and you have the tax group who are having to report it, that information, you start having a tax solution where people believe and trust in, rather in most cases people just deal with because it doesn't work properly. So what about some best practice? Calculate a tax on everything. If you don't calculate a tax, then how do you know the tax engine has worked correctly? And if you don't calculate a tax, then how do you report that tax? So try and calculate a tax on everything. Use tax names with a percentage in and not just codes. Now this is something which goes back to more of a preference. The solution I've designed, we incorporate the percentage in the tax rate name. We don't end date taxes ever. We just create a new tax which has a different different default date. So that allows us to go back and use old tax rates in a future period, which is essential for credit memos in AR, for example. Use more rates, not less. Now, the Oracle approach was to actually reduce the number of tax rates that are used and to use the tax reporting codes. Tax reporting codes weren't visible really in R12, so you need more rates. With Fusion, those tax reporting codes are going to be made more visible. So with that in mind, it does mean you can have less rates. It means that you can have a tax rate that will tell you whether it's an asset, a service, whether it's got inclusive or anything else, visible immediately. So again, Oracle are trying to enhance your solution to be able to allow you to get more out of the system. But the whole point of using more rates means allow for more information. If you're automating the system, then the users don't see it anyway. Only that it all comes out in the reports. Design the solution to be global. As I said before, you don't need a situation where different countries have been set up by different people and therefore it's almost impossible to maintain. Make use of your business processes. So, for example, if you have a new customer, the customer is created and you want to put an order through immediately, a simple business process which puts that customer on a credit hold of, say, $1 means that that order can be created, but it doesn't get sent out until the finance department have been able to assess whether or not the customer has either an exemption certificate or it has registration details in European countries. So in this way, you are not sending the invoice out until you've confirmed what type of tax needs to go on it. And think ahead. Don't waste your resource. Think ahead in terms of designing the solution with enough spaces or gaps to allow you to make changes if you need to in the future. If you combine all your rates into just a couple of determining factors and then something changes, you have to rewrite your whole program. So think carefully. And treat your tax solution like your chart of accounts. Don't keep creating new tax rates all over the place, because in many cases a tax rate will already exist to deal with the requirement, or you need something more fundamental like a tax reporting code to capture a certain amount of information. The tax engine isn't perfect, so Oracle obviously working on that. I don't work for Oracle, but I really do support what they're doing. I think for once in my life, I can say that Oracle really do care certainly with the tax module. The guy who runs it on the design, a very smart guy, and he really has some great ideas, and he's getting those into the tax module. So, but it doesn't do everything. So, for example, at the moment, there's no functionality for handling bonded products. So, in Europe, for example, bonded products are those products that are held in a warehouse. So, rather than when they're imported into Europe, they have to pay customs duty. But if they're not sure whether that product is actually going to come into Europe, or it's just being held in a location until it's moved on to, say, Russia, then what they do is they hold it in a bonded state. So Oracle doesn't handle that. I mean, there is a simple workaround to do it, but that functionality doesn't exist at the moment. But there are, as I say, simple workarounds. So even if that functionality doesn't exist, it does exist, or there are ways and workarounds to get it done. And I'll put here a couple of other things, which were actually from an R12 presentation I did. And I've left them in because these are common problems which a lot of you may be familiar with. So, for example, the intercompany solution, there is no ship-to address field located. That's been fixed in Fusion. So it's not been backported to R12. It's not been possible, but they've redesigned the code to allow that to be fixed in Fusion. No final ship-to. Again, that's been fixed in Fusion with the location of discharge. The VAT reporting has been enhanced, but due to the number of countries you have and depending on your requirements, the VAT reporting is still limited. Oracle have done enough to say, look, there you go, there's the financial tax register, or there's your localized reports. But for example, we've designed a report that allows a one report that covers all VAT and GST countries. So it links into the correct bank exchange rates, for example, for Eastern European countries. The same report can be used whether it's in Japan or in France. So there is more that can be done with the reporting, particularly again in BI. We've got some really good reports around BI that give more value to the tax solution that you have. So there is a little bit limited reporting. If you do customize your tax solution, keep it simple. So, for example, never customize a solution, which I see on a constant basis, where somebody else says, okay, well, we've got an intercompany solution here. It's got to be this tax code. So what we need to do is say, well, if it's this supplier, this customer, it's intercompany, then we need to go and do a lookup from these three tables, and then we have to insert XX, VAT, interco 4. And then you insert that tax classification code into the system, and then the tax classification says if the tax code is interco 4, then the tax code is interco 4. Instead of doing that, all you need to do is pull information that is not available to the tax engine and put it into fields that are. So whether you take a value such as the dummy tax code and where you have this tax code 4, and you can insert that into the system, you can then have rules that say, well, actually, I'm looking at tax code 4 as a tax code. I'm checking who my supplier is. I'm checking the party classification, the registration status, and I may have 4 rules around that, and that one tax code that we've inserted could have 4 different results. So keep the tax logic within the tax engine rather than trying to design tax logic outside the engine. Use dummy tax codes. There's no reason why you can't create values of dummy tax codes that can then be used to drive the right tax. And there's no need to modify the tax engine code. As I said, you can create small little custom processes that lift information from one area and put it in another. I've never had to customize the tax engine code at all, and I've had most scenarios when it comes to tax. We've always met our clients' tax needs. So, any questions at all? I'll put my details up. So we've got a couple of blogs. We've got on LinkedIn, I've got the Oracle Fusion and R12 Business Tax. We've also got the Oracle Tax Management SIG. So we've got a couple of LinkedIn groups. We've got, as I say, I've got a blog that we run for my company that we put a lot of information in there. And we're more than happy to answer any questions that you may have, whether now or in the future. So please take our information. So Anna, I shall hand it back to you.
Thank you, Andrew. And everybody, I do want to remind you you are on mute. So if you do have a question, if you want to pop that into the question field now, I will be happy to read those out loud for Andrew. But if not, you have a more in-depth question you'd like to share with him later, he has put his information up here. We want to thank you all so much for joining us today, and want to remind you that this recording will be available on the Tax Management SIG website in just a few days. And I'll give you any last call for questions before we stop our recording. All right, well, we want to thank you all so much for joining us and hope you have a wonderful Friday. Oh, yes, we do have a question. Okay, Andrew, is there a support for tax assessment for inventory movement? Let me make that larger. So is there a support?
Normally inventory movement is, normally it's captured with your interest reporting, so particularly for Europe. And I suppose the 2 areas are very closely linked, but they're not, inventory movement isn't necessarily driven by any sort of tax. So the interesting thing is that if you're moving products, for example, from one location to other, there may be tax implications, and what you should really be looking is potentially, so for example, in Italy, if you are sending samples out, you're still required to calculate the VAT on the invoice, and in many cases the supplier who's sending those samples will swallow that tax. So what you would actually do there is design the rules to actually check, say, the assessable value rather than the actual the base amount. So you can discount the invoice 100%, but still have a value such as the assessable value, which will drive the tax. So you'll end up getting an invoice that has no item expense on there, for example, or anything like that, but you can still have the tax on there. So from an inventory point of view, I don't know of anything, and I've never had to do anything where we have a separate report that generates tax for inventory movement. However, you can generate invoices to record the inventory movement, so if you use an intercompany process. And there's no reason why you can't create a reporting-only tax, in many cases, that allows you to calculate a tax that actually doesn't necessarily have to hit any distributions, but will allow you to do some reporting. Hopefully that answers your question. If you want to send me an email or something like that on the LinkedIn, put a discussion on there on the LinkedIn discussion forum, we can go into a bit more detail if I've missed the point.
Wonderful, thank you. Any more questions? Okay, thanks is the response. So thank you, Andrew.
Okay, great. Yeah, I would say the SIG page, the Oracle Tax Management SIG page, we're in the process of updating it. So it's quite old at the moment, but we will update it soon. So don't just, those of you that have been there and think it's rubbish, it is, because we haven't updated it in about 4 years, but we are in the process of getting that sorted out for you.
Wonderful. Well, thank you all so much for joining us today. We hope you have a fabulous Friday and enjoy your weekend. And I will stop the recording now. Thank you all, and thank you, Andrew, for leading us through all of that.